What is going on, guys? Welcome back. It's Institutional here, and we are back with another video. Today, we're going to be covering again the series that we have, which is building data. So, we're going to go over a little bit about price action today and how we could have capitalized with US 500 instead of, when order flow is shifting, what can you do to turn from the opposite end to the real trend that price is showing you? So, let's take a look at price today, right? And what we want to do for when we're building data again is look at the chart and try to see what you analyzed wrong. So I'll start off with noting that at these highs here, we have a lot of equal highs that we have to essentially run, right? And I wasn't really focused on this when I was trading. I was too focused on looking for this type of gap and run back below a discount, right? So our real state of structure will be from this high to this low. So what I wanted to see today, admittedly, was price come back down to at least this order block. And that was going to be a target where I had for the shorts. But I didn't take note of, all these highs that we're building. It's probably going to be a target for SMC. And take a look at how these wicks are showing you that price is just grabbing liquidity, right? So I didn't take note of that. And then they're using this type of displacement as an inducement. So now let's move forward, right? So what we can see is that over here is our overall range, but we also have to take note of our smaller time frame range. So where is that? It will be from this high to this low, right? So now what we're doing is taking a look at what price is presenting to you. So now let's take a look at when does price open up? When are you looking to trade? Well, it's going to be from 8:30 all the way to 12 or 11, whatever you want to do it. And then from 13 o'clock all the way to 16. A little bit about, the time frames that I've been noticing is that sometimes price tends to move at lunch hour. So I'm going to start, not lunch hour, but 11 to 12. So I'm going to start seeing how I can start implementing that instead of just limiting my time to 11, start applying that extra hour to 12. And then 12 to 1 will be a no trade zone, as we know that already. But if we can capitalize from that, I can still try to get some trades in if I see the market doing what it wants to do. So let's take a look at, my mess ups today and basically how I was able to recuperate some of my losses and how we can understand that when order flow is shifting with you, you can still get profit for the day. Not that you're still aiming for huge RR, but you're just basically aiming, let's say you took a loss in the morning and the afternoon session, what you're looking for is for price to essentially come back down to a level where you can mitigate those losses and either end the day at break even, end the day with a little bit less of what you lost, or end the day with profit, right? That's what we're looking for as traders on a day-to-day basis. So looking at our price, what we do here is we drop down to M5. And what I want to see is a displacement lag at the 9:30 open because we had no news today at 8:30. So when there's no news at 8:30, then we want to see how 9:30 price action reacts, right? And what I saw is that over here, we have our 8:30 opening price. So basically what I want to see is price trade above that to show me some sort of Judas swing, right? Because we follow that as far as 12 a.m. and 8:30. So at 12 a.m., what do we get here? 12 a.m. when we look at price, our order flow for the day, at least what I took the order flow for the day was bearish. And why is that? I'm gonna tell you guys why. So here's our midnight open candle. Price opens up higher. So we're inducing buyers and then price drops down lower. So what I saw is that here was already setting up the order flow because we had an overnight run down with London. So yes, I should have kept my eyes on these levels above to get triggered into. But what I saw is that this order flow overnight could potentially be a bearish level or bearish confirmation that price wants to essentially go lower, right? So now looking at price, that was already one of my mess ups, right? Now looking at order flow and now understanding that this level right here is going to act as a magnet, right? We're probably going to be looking to take these highs because they're just way too clean sitting up here. And anybody that was capitalizing from here on the shorts in the morning, they're going to, get clapped. So that was already one mistake. The other mistake was, again, looking at how price is building here. What are we making here? We're making buy side liquidity, right? Where we're making this type of structure where price is showing you that here they're getting able to short. We have a type of trend line here, right? So when you see these type of trend lines, majority of the time, people will get stopped out. So moving forward, what do we have here? We have a drop below down. We have a break above. So what I saw here is a fair value cap. What I'm looking for now is price to come back up above this level and come back up towards this M2, right? And if we look at the M2 structure, well, we have nothing here. But if we look right here, what do we have right here? So I messed that up. It wasn't this trade that I was looking for. I was looking for this trade right here. So we have 930 over here. Price drops down, gives me a displacement leg. And we have the same idea. We have a displacement leg lower that breaks above structure. So here's our model, right? We have a leg higher and we have a leg lower. So we broke the highs, we broke the lows. What I was looking for was right here, right? Sorry for messing up here. It wasn't this one, it was this one. So this is going to be my selling pool that I'm looking for price to come back down or up towards so we can continue selling. This is what I was looking for in the morning. And if we now tweak this a little bit higher, I can see that from here, my last value gap was above here. So I want to be trying to buy as much at a premium as possible. So if I have a fair value gap above in the M2, then I'll use that one instead. And we can see how that hits the 50% drastically clean, but then it comes down and it breaks above that. So start taking note of this, right? Start taking note of this. Then what do you see happens next, right? So if you look at this back to the M5, we covered a little bit about buying pools and selling pools. This was our last fair value gap from the M5 that was used as a selling pool, right? So smart money was looking to sell here just like you and I were, if we understand order flow. But once they stop them out, what are they going to do here? They're going to use this as a buying pool so they can mitigate their losses and get back on the long. So now let's say, like I got clapped. What you want to do first is not anticipate price, just wait for price to show you its hand on the afternoon session. So starting from 1 p.m. to 4:30, 4 p.m., right? So now let's look up price. So again, here we got clapped today, all right? Whatever. Now we're looking for is something, what can show us that price wants to go higher? So let's drop down to M15 because we understand that this now gets used as a buying pool and the M15 has now shifted to a bullish trend. So we're looking for continuations on the afternoon session, right? So now looking at price, we're going to want to have to tweak this. So let's look at M15 and let's see what price is showing us here. So if we look at M15, what do we have right here? We have a fair value gap, right? That we have mitigated. So this order block becomes valid. We can go ahead and fix this opening price right here. And we can go ahead and delete this because now this has already been grabbed, and delete this because this is not our pool anymore, right? Our liquidity pool is going to be where? Above here and below this order block right here. So what I'm looking for now is price to show me some sort of displacement below the 50%, below the 50%. And where coincidentally is below the 50%? At this order block, at this M15 order block that we have our eyes on, right? So again, we got collapsed in the morning. What we're looking for now is a continuation because smart money is now shifted the order flow from bearish to bullish. And where are the footprints of that? Right here at this fair value gap. This last fair value gap that was used as selling, they'll use this as buying, right? So now we have to see, what do we see here that's showing us that price wants to go higher in smaller time frame structure? Let's drop down to M5. So if we drop into M5, well, what do we have right here? What can you guys see clear as day right here? Fair value gap, right? So all you have to do now is look at this. Look at this. And this is a trade that I took today that mitigated some of my losses. We can go ahead and delete that. We can go ahead and delete this to make price a little bit cleaner. We can delete all of this as well. We can have just our targets and our fair value gap, right? So we're following structure. We want to be trading below the 50% at a discount. So are we below 50%? Yes, we are, right? We are at a discount right here. So now we have the fair value gap. All you have to do now is put your long at the 50% right here. My stop loss was a little bit more conservative because again, I was looking just to mitigate my losses. My take profit was up here, nice little 2-to-1. And if you want it to be a little bit more risky, you could have your stop loss below the candlestick that has made the fair value gap, which is where? Right here. And that would have been a 3-to-1, right? But let's say for whatever reason you missed this, you have to keep knowing that smart money is always showing its hand. So let's say you were more of a conservative trader and you missed this trade, right? Okay, well, now you have to look for what is order flow telling you? What is this right here, guys? Fair value gap, right? So if you're following this smaller time frame structure, what are you looking for? You're looking for that bearish fair value gap to be used into a buying pool, right? They use this as a buying pool. So if they were looking to sell here and price was above that, you're following the same type of principles, right? You're looking to trade below at a discount, and you can see how we already mitigated price here. So all we're looking for now is some sort of confirmation to tell us to go back up higher where? To this double top where retail is shorting. So now let's go ahead and tweak that and let's drop down to the M2. If we drop down to the M2, what do we see here? clear as day, right? We mitigate price, we come up higher, and we have a fair value gap right here. So all we are doing is what? Again, we already have double confirmation or triple confirmation that price wants to go higher. And you have an order block right here. So this is a very high probable trade if you were to miss the first trade that presented itself in the open, right? So now what would you do here? Again, this is just building data so you understand what you can do if you get stopped out in the morning and how you're able to mitigate your losses when price presents its hand to you. That's what we're always looking for. Price to show its hand. Stop loss below the order block and take profit where? Above the equal highs for a nice little 4-to-1, right? So I hope you guys got a bit from the video. That's basically, again, understanding when you're in the wrong side of the trend, how you can capitalize from the right side when price are showing its hand, and understanding order flow in terms of what structure is giving you throughout the day. You know, start looking what price does from the morning session. 80% of the time we'll have a follow through in the afternoon session. So if you're looking for shorts in the morning session and you get stopped out drastically and price shows its hand, all you're looking for again is for price to come back down to a discount in the afternoon session so you can capitalize from that. And then if you want to be more conservative, you can wait again for price to show its hand ×2, because they will always do that. There will be some traders that here we're looking to short, and those traders are not going to be traders like you and me. They're going to be smart money traders that we're looking to short here. And once they get stopped out, they'll want to bring price back down so they can mitigate their losses and follow through with the trend. So try to take note of that. Try to, again, just always try to build data every single day so you can become that better trader. I hope you guys got a bit from this video. I will see you guys in the next one. Safe trading, guys. All right. Take care.